Cash Plus, Olint, Loom, the list goes on and on. At some point, or maybe several points in your life, everyone you know may have been talking about some new investment scheme that promises to double and even triple your money in a week. So you should invest too, right? Maybe not. I'm Kalilah Reynolds, and it's time for another episode of Money Mondays JA. Money Mondays JA is brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today and follow We Are Proven on social media. Before we get started, don't forget to like this video, subscribe to this channel, and of course click the bell icon so that you can be notified whenever there's a new video. Also subscribe to my newsletter at KalilahReynolds.com/newsletter, where you can read a transcript of this episode. So every few years we hear a lot of I didn't know and similar sentiments from people who've lost all their money in a Ponzi or a pyramid scheme. So many of us fall prey to them because we don't know what they are or how to spot one. So what are the red flags that you should look out for to avoid a pyramid scheme or a Ponzi scheme? Well, red flag number one, promise of high returns at no risk to investors. How much return on investment can you expect to see when you invest with a bank or on the stock market? 2%? 5%, 10% within the next quarter or the next year? What about 300% next week? No, I'm not kidding. That's how much the pyramid scheme Loom promised potential investors. Ponzi schemes Olint and Cash Plus offered their investors up to 120% in annual returns. But if it sounds too good to be true, it probably is. What most people don't realize is that those exorbitant and unrealistic rates are quoted to lure potential investors, reel them in. So you may be asking yourself, if those rates aren't real, how come I see so many people getting money? Well, that's another trick used to lure investors. At first, early investors will see high rates of return because the person operating the scheme will use their own money to make it look as though the investment is working and it's legit. For the fraudster, using their own money earlier allows them to turn a larger profit when there are more investors to steal from. While at the same time, be wary of the promise of no risk. Risk is unavoidable when it comes to investing, especially if you want to see substantial returns. For that reason, investment brokers help you choose investments that suit your risk appetite, how much risk you're comfortable with taking. In order to see 120 or 300% returns, your risk appetite has to be just as high. And with a Ponzi or pyramid scheme, you're taking the biggest risk, somebody disappearing with your hard-earned money. So red flag number two, ambiguous investment. When you invest in the stock market, bonds, or real estate, you know exactly where your money is going and where your returns are coming from. However, the same cannot be said when you invest in a Ponzi scheme or a pyramid scheme. That's because the fraudster will use different methods to hide the money trail and prevent investors from seeing how the scheme actually works. They may tell you that their strategies are a trade secret or are too complex for you to understand. They'll use financial jargon to try to confuse you, or you won't be allowed to see official financial statements. Olint was one that was described as a private investment club, where its head, David Smith, would pool investors' funds to engage in foreign currency trading. And if that sounded vague to you, well, you're not the only one. Ambiguity is a common method employed so that nobody can say with certainty what their money is being invested in, especially to give those high returns that I mentioned earlier. In reality, a Ponzi scheme works by robbing Peter to pay Paul, using the money of later investors to pay off earlier investors. The money from later investors is paid out under the guise of returns from a legitimate investment. In a pyramid scheme, each investor pays a fee to enter the scheme and must recruit more investors. New investors sit at the base of the pyramid, and their recruitment fee is used to pay investors who are higher up. Those new investors can only recover their investment by recruiting new investors and moving to a higher tier on the pyramid. Both schemes rely on new investors and a constant inflow of cash. When the pool of new investors dries up, well, the scheme just falls apart. Red flag number 3, recruitment. As I said earlier, pyramid schemes generate income from fees paid by new investors to enter the scheme. As a result, pyramid schemes place a heavy emphasis on recruitment. Loom is a pyramid scheme circulated through social media and WhatsApp, and that required investors to invite at least 2 people to keep the Loom going. And this flag may be hard to spot because recruitment is not an automatic sign of a pyramid scheme. You may also be looking at a sales strategy called multi-level marketing, or an MLM. If you've ever seen an Avon catalog or purchased Avon products from someone, then you've bought from an MLM. Both pyramid schemes and MLMs pay a commission for recruitment. However, the difference between an MLM such as Avon and a pyramid scheme like Loom is that an MLM generates income from legitimate product sales. Pyramid schemes rarely rely solely on recruitment fees. Pyramid schemes don't have to involve a product, but some of them will in order to give the appearance of an MLM. So know the difference. Now, red flag number 4, licensing. Whether you've seen the first 3 flags waving in your face, or you don't have enough information and just want to make sure, licensing is a dead giveaway. Contact your local securities regulatory body, which in Jamaica is the Financial Services Commission, the FSC. Various stock exchanges across the Caribbean also provide a list of licensed brokers, so don't be fooled by the supposed legitimacy of a company. Cash Plus was a company, but being a company doesn't automatically make it a licensed investment broker. So before you invest all of your money in that scheme that sounds too good to be true, just make a quick phone call to see how true it really is. Well, that's it for this episode of Money Mondays JA. Now here's what's coming up on Taking Stock. The real estate market continues to soar to new heights, even in a global pandemic. But while house prices have gone through the roof, commercial real estate isn't doing so well. We'll hear from CEO of Kingston Properties, Kevin Richards, and CEO of Victoria Mutual Property Services, Michael Nita. And the analysts weigh in on the latest market developments. What does the iPhone 13 have to do with U.S. inflation? And Productive Business Solutions has acquired its sister company, PBS Technology Group, increasing their footprint in Latin America and the Caribbean. We'll discuss this and more on Taking Stock Live, the Caribbean's #1 business show, with me, Kalilah Reynolds, 3-time Business Journalist of the Year. Catch new episodes of Taking Stock every Tuesday at 8 p.m. on YouTube, KalilahReynolds.com, and all your favorite podcast platforms. Let's get this money. Now don't forget to like this video, subscribe to my YouTube channel, and of course sign up for my newsletter at KalilahReynolds.com/newsletter, where you can read a transcript of this episode. You can click the link in the description box below. Also follow me on Twitter, Instagram, and TikTok. I'm at Kalilah Ray, and on Facebook at Kalilah Reynolds Media. If you're into podcasts, find us on your favorite podcasting platform, including Spotify and Apple Podcasts. I'm Kalilah Reynolds. Let's get this money. Money Mondays JA was brought to you by Proven Wealth. Visit provenwealth.com to speak to an investment advisor today, and follow We Are Proven on social media.
Let's get this money.